Hello, this is Daryl, and I'm going to talk a little bit about the H4 trade setups that I like. And at this point, I only use them on the dollar CAD, my favorite for this method, the Euro dollar, and the New Zealand dollar. I'm looking also at others, but typically I'm avoiding the ones that are can get too crazy too easily, like any of the pound pairs. And right now, the other kind of odd mixes, Euro CAD, Euro dollar, excuse me, not Euro dollar, but Euro Aussie. Okay, so what I use is I use a couple of ALF filters. It's the blue lines and the blue line down here and the white line up here. And these are adaptive Laguerre filters. Settings are as such. On the white one, it's 20, 5, and 2. On the blue one, it's 25 and 3. I use a trailing stop of 35 pips. My fixed stop is 22. And that's that's it. Pretty much then the entries are taken 14 pips. That includes the spread above or below the filter lines, which in this case, the white and the blue, the adaptive Laguerre, and then the red ones I have down here are filters, prices that I used previously. And these are a 36 and a 48 EMA, which work quite well also. It's just that the adaptive Laguerre filter filters out more range trades that would lose you money. The 36 and the 48 EMA sometimes gets you in earlier on a trade so that you would make anywhere from, say, 10 to maybe even 25 or 30 pips more than you would using the adaptive Laguerre filter. It pretty much is, you know, one or the other is going to work almost exactly the same as the other one over long term, over like a year's period. Okay, so I mentioned about the entries, 14 pips above or below. I do not stand aside for news events. Typically, I don't. In fact, this morning this was non-farm payroll, January 6th, I guess it is, and I was assuming January 5th, 2018. And so this particular one, get this out of the way, that I took on the New Zealand dollar was, I took it actually yesterday. As you can see, these are 4-hour bars, and we have, this is the one that I took it on right about here. And that was at yesterday, I don't know, about this time of the day approximately. I don't remember the time that I took it because it hit 14 pips above the line and continued up without a retrace in order to hit my stop loss, which would have been about somewhere down around this area right about here. So how do I handle this trade in progress? Okay, so I mentioned I use a 35 pip trailing stop. Okay, and I used to move it incrementally at plus 25 and then plus 35, but I just now let it go to a trailing stop. So as soon as price reaches plus 15, I guess, the stop loss starts following price. Okay, so then, and that happens all the way through plus 59. Okay, so at plus 59, if I would happen to get a retrace, then it would have to retrace 35 pips, which would give me a 24 pip win. Okay, I mean, I know I'm giving up a lot here, but I'm trying to give the trade some room to breathe. Now, once it reaches 60 to 69 pips, then I use a 40% pullback, and that'll give me anywhere between 30 and 35 pips. On this chart here, say for instance, this was like, say, over 60 pips, which it's not. It's only maybe, what is it here, 40 pip. Excuse me, a 60 pip or more. Then I would bring my stop loss to the 40% retracement. So that would take that amount off the maximum travel of the trade. And at 70 pips, what I do then is I go to a 25% pullback. Okay, and the 25% pullback, it would be right here. So if price went up to this distance here at whatever the top was, and then the overall maximum plus pips was 70 or more, then my retrace wouldn't happen, or would happen at 25% pullback. And these work pretty good. I've done a lot of testing on this, and I'm not sure which ones are going to work better. But the whole point of this is to catch some of these trades that go on forever, and that can happen a lot on the CAD dollar. I think in this point in time in 2017, 2018, then it happens, excuse me, on a lot of other less volatile pairs that are, I mean, this is not very volatile until it is, and then that's like all prices. I think the biggest trade, I don't have it handy here, but was about 230 or something like that. It was over 200 pips on one trade. Now, I'm trying to figure out how to get even more out of that, but at this point I haven't figured that out. One thing that I've looked at previously is splitting up the trade, so breaking it up so that I'm looking at maybe taking half off at the first time I get a pullback, say to the 25% or the 40% or whatever. But then quite often the price will just continue down, continue down, and end up hitting whatever my new stop loss might be. And, so instead of making the full, let's say, 30 pips on a trade that pulled back to here, I would now only make half of 30 plus another 5 or 10 down here. And you add that up, and that's only averages out to, say, 20 instead of 30, so I'm losing money. On the other hand, if it does continue up, I could make it a lot more on the other half of the position, but now it has to make it up another 30 pips and well beyond to hit the next plateau that would bring me back to still making as much as I would have made getting out here originally. And I actually have tracked that, and it does not pencil out. So for now, I'm going to stick with this basic method right here. Now, how well does the adaptive Laguerre filter work, or in comparison, say, to the Simple 36 and the 48 EMA? I have a good example right here. This is the dollar CAD in September 2015. And as you can tell, it was range bound in about 150 pip area, most of it contained within a 100 pip area, in which there was 35 or 38 trades. I can't remember exactly. And the 36 and 38 EMAs did actually not bad. You ended up going through all this mess and still winning 36 pips. So that's almost 1 pip per 1 pip per trade. Anyways, I then applied the adaptive Laguerre filter to the same times and exactly the same trading zones, and what I came up with was slightly different. Well, considerably different. Whereas, let's see, you can still see that. Okay, well, anyways, probably let me pull this over. Over the same time period, my total wins was 279 as opposed to 36. So in this case, the adaptive Laguerre filter made a huge difference in how this worked out. Right now, where it doesn't work out is in cases where you have. Let's see if I can find something on here. In cases where you have these big long runs. Okay. All right. Does this qualify here? I don't know. Well, anyways, as you can see right down here, you get in earlier on a cross above the 36. You'd get in somewhere right around this area. Whereas in here, you're not getting in until about here. And you could have even got stopped out here. But it doesn't have a significant pullback. This could have been a stop out actually here. I don't know on if you'd have gotten in with the EMA or even the adaptive Laguerre filter. But sometimes the way this works out is you will get in 10 or 12 or 15 pips sooner than you would have with the adaptive Laguerre. And sometimes it works the other way too. Here you would have had some extra losses with the adaptive Laguerre, and with the EMAs, no, because they didn't go below the line. They only went to it. In fact, these would have offered extra entries right here. Retouch of the line, then you can enter again. You go up here, looks like you'd have made a few pips. Go up here, looks like you'd have probably lost a few pips. And then this one here, you would have done all right too. So that's pretty much it in a nutshell. I can't think of anything else to add at this point in time. I hope this was informational and useful, and it could help somebody. That would be what I would hope for. So this is Daryl signing out.